Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring and what they're doing. Well, see, we do have marginal gains for the Nikkei and the Hang Seng. The Shanghai, however, is advancing by as much as 0.4%. Does it have any impact on the SGX Nifty? Yes, it does. So for now, we are looking at a little bit of a recovery indicated by the SGX Nifty futures, which are currently trading up by as much as 0.5%. Still below the 11,000 mark, and that is going to be a crucial level to watch out for. In the immediate term, of course, it's all going to be about the 10,900 mark. But on that note, let's get in Navneet Saluja D'Souza for an update on the futures and options space and what that can indicate. Navneet.
Thanks for that, Agam, and good morning to both of you. Well, we've seen immense selling pressure in the last 2 days coming in. And if you look at the cues that we've been getting from the derivatives market, first, the key takeaways yesterday with 180-point fall on Nifty and also on Bank Nifty over 600 points. We did see both these indices breaching their 20-day moving average. And not only that, they closed below their 20-day moving average. With crude prices surging, you also saw back home the India volatility index also spiking. Remember, it had cooled off from those levels of 18 last week, but again in the last 2 sessions it went up by about 14%. And a very key indicator which is watched by derivative analysts is the put call ratio from the option side, and that slipped below the mark of 1 to about 0.98, telling you there are a lot of short bets being placed in the system, and that tells you there are more positions on the call side if you look at from writer's point of view, which means there is more shorting which has taken place in the system. So going ahead, first on index futures, when we started the series, the base was just about at 1.78 crore on Nifty and 0.15 crore shares on Bank Nifty. And this is yesterday's 1.79 and 0.15, which tells you there are no fresh positions being added on index futures. There is some bit of lack of participation which is there. And this is just yesterday's change. So Nifty open interest went up by 2%. Bank Nifty went up by 1%. So just mild bit of shorting was seen on the index futures. That's Nifty and Bank Nifty. But if you look at the option snapshot, that's giving you a better picture here. The base is moving lower because the maximum open interest base, which was at 11,200 for September 19 expiry, that's moved to about 11,000. And there was aggressive call writing seen at strikes like 11,000 and 10,900. And the put writers yesterday went in for cover because there was huge unwinding also, which came in for the 10,900 put, which shared nearly 12 lakh shares in open interest. And what are the key levels you should watch out now if the markets were to scale lower? By the way, the September low is 10,746, which was seen on September 4th, and August low is 10,637. So these are the 2 key levels now going ahead you should be watching out on Nifty. And looking at this yesterday's change, as I mentioned, put writers went for cover. So 11,000 and 10,900 were the strikes where unwinding was seen, and 11,000 and the 10,900 call strike. Even the lower level, by the way, 10,800 calls, saw some bit of open interest coming by. Besides that, otherwise, if you were to look at how the FI bets are being placed so far, Agam, the FIs have been net short on the index futures side, and that's what we've been talking about. This is, of course, the future snapshot here. Let's just pull up the FI data as well. When we started off this series, they were net short on index futures. Positioning as of now, this is the index option. Okay, let me cover the index option side. So positioning on the call long side is 34%, put long is 66. That's telling you they've bought more of puts, which are actually your short positions. And these are the contracts, by the way, added in the last 2 sessions. So in the put long, they added 65,000 contracts, and unwinding of long positions was seen. And similarly, if you were to look at the data where they've been writing options, on the call short side, they've added about closer to 40,000 contracts. Positioning once again remains higher here, and that's 54,000. Similarly, for the index futures side, if you were to look at the data, when we started the series, they were net long only to the tune of 25%, and the data still remains the same. It is at about 27%. So net FIs have been net short, and more positions have been taken on the index options side. With that, it's back to you guys.
Okay, thanks so much for that, Navneet. We'll certainly watch out for the FNO data that comes in throughout the day today. Meanwhile, on the commodity side of the market, crude sank from 3.5-month high to trade near to the $64 barrel per mark. After Saudi Aramco said it had restored 41% of the capacity damage in the drone attack. Speaking to Bloomberg, CEO Amin Nasir assured that the facility will be back to full capacity by the end of the month. Let's listen in.
Project management is a strength for Saudi Aramco. We do mega project all over. So when this happened, immediately after doing the assessment overnight, we have put our workforce. We have subject matter experts, engineers, professionals, the operators, the craftsmen, and we worked in parallel on each train that was impacted. So each train had a full team working on it from A to Z to restore it as a project by itself, and the manager of operation of Abqaiq plant was given full authority to execute with availing all the resources required for him 24/7. So that helped us to put the facility back on stream.
And when will that be back at full capacity at Abqaiq?
Abqaiq will be at full capacity, of course.
By?
As I said, by the end of September, Abqaiq will be at capacity.
And you were able to meet your shipments to international customers?
We are able to meet our shipment to international customers. When the supply was interrupted, we used our storage facility in Kingdom and out of Kingdom.
Well, naturally, there is some improvement when it comes to sentiment, considering we do have some of that capacity up online, and that's clearly had an impact on the way Brent crude has been panning out. We've also seen that improvement in the WTI. Will that have a considerable implication in our Indian markets? Well, we all know that, and do remember that OMCs will be in focus, considering that we did see a very sharp drop in oil marketing companies after the kind of gains that we saw in just 2 sessions ago. And so yesterday we did see that weakness in BPCL, HPCL, along with something like an Indian Oil Corp as well. But the real question is whether or not we do see that recovery after we have the news and updates coming through. So there's plenty to keep an eye on. Do remember, it was essentially the oil and gas sector which did weigh down on the broader markets as well. Besides that, of course, we're going to have to keep an eye on several other factors, but oil will continue to be in focus over the next couple of days, Darshan.
Okay, let's move on to a Bloomberg exclusive. Howard Marks of Oak Tree Capital says that he is now looking for opportunities in China. In an interview to Bloomberg Television, Marks said that the opportunities to make money in distressed debt are never constant. Let's listen into what he had to say.
Opportunities come and go. The opportunities to make money by buying distressed debt are not constant. In fact, they're the least constant thing I know about. We have a 31-year record. The result is pretty good on average. We've made the vast majority of our money in the funds of 5 years, and at the other times the opportunities recede. Everything is risky if you can't figure out what you're doing and you pay too much. The other thing is when there's too much demand, you can't get great bargains, and if you succumb and participate and pay too much, yes, then it's risky.
All right, so let's talk about where we are. Do you expect to see another 2008 type opportunity, which was one of the years that I imagine you're talking about, in the next couple of years?
I don't think we're in a bubble. I don't think we're going into a bubble comparable to 08. So there's no reason to believe that we'll have the panic that we had in the fourth quarter of 08 following the bankruptcy of Lehman Brothers, another global financial crisis. But, there's been a great deal of debt issued. There's been a battle to be the person who buys that debt. The battle has taken the form of bidding down the quality and the safety. So there's a lot of risky, aggressive debt that's been issued in the last 5+ years. And when that collides with a weak economy, I think there'll be great opportunities.
But not necessarily
right. There's the quantitative aspect of the amount of weak debt, and then there's the qualitative aspect of the amount of panic. And there's no reason why we should have that degree of panic again. People were talking about the end of the financial world 11 years ago. I don't see a reason to talk about that today.
So right now, there's a record amount of dry powder or just cash, I guess, or that's been committed to some of these mandates. And I'm wondering where you're seeing opportunities, even though everything has been bid up at this point.
Opportunities are very few today. I wouldn't even use the term seeing seeing opportunities. Investing in distressed debt is a struggle today. You know, the economy is too good. The capital markets are too generous. It's hard for a company to get into trouble. If they get into trouble, the capital markets are happy to bail them out. You know, it's a struggle today, and it would be misleading to your viewers to talk about where there are opportunities. They're practically non-existent.
Well, does that mean that you're not investing?
Largely, yes. It's very, very hard to put money to work in distressed debt.
Would you rather than put your money in cash, or where do you put it instead?
Well, what we do is we don't call it. We form funds, people commit amounts of money to the funds, and we call it as we spend it. So right now, we're not calling very much.
What about China? You've talked about how there are opportunities there. Is that still the case?
Yes, I would say China is one of the exceptions. I mean, China grew on excess capital investment facilitated by aggressive lending from the banks and also non-banks. And I think they have big piles of NPLs, of non-performing loans that will not pay. And I think they want to recirculate that capital by getting those NPLs off the books. And we're very interested in being part of that process.
Okay, T.S. Harihar, founder and chief executive at HRBV Client Solution, joins us on the show. Good morning, Hari. What's the sense? It's been constantly, we're seeing a one-way selling, a sell-off that's seen in the market. What are you advising clients at this point of time? Is it time to start accumulating? You think that this cut will get even deeper? What's the sense that you've told them?
See, we're just asking people to, wait for a few days till oil gives a little more clarity, because I think the big question mark today is oil. Trade war, I think, is more or less factored in. The worst is probably over. Global growth, I think everybody has reconciled to annual growth of about 6.5% in India, probably about 2.6% globally. So I think these are things that the markets have reconciled to. What they've not reconciled is a worst case scenario where oil could go up to $80, $90. I think that could be a big dent, because if you look at it, a $10 movement means about 25 bips on inflation, about 60 bips on current account deficit. So I think that is, in my view, the big question. I'm not sure how genuine these statements are coming from Saudi Arabia, that they have restarted all their production and back to 100%. I would believe it has got to be a little more gradual than that. So we'll have to wait for the confirmation. But ideally, I don't think I would jump into the markets right now at this point of time till there is greater clarity on the oil front.
Okay. What about factors beyond oil? Because clearly we've been talking about oil right now, but it can't possibly only be the thing, because we have seen a lot of movement and a lot of gyrations in something like an auto sector and the metal sector. Let's talk about the metal sector right now, because that's also been moving right now.
Again, metal, I'm not surprised the kind of correction they saw yesterday, because if you look at the latest China industrial data, I think it has been one of the lowest that we have seen in the last 18 or 19 years. So I think that typically has a sentimental impact as far as metals are concerned. Auto, it's a mix. It used to be a mix of two things: slowdown in consumption and financing costs. Now there is a third thing: fuel prices that has also come in. So I think that adds to the answer. And if you look at the sectoral indices yesterday, auto was the biggest loser, because they already have two headwinds against them, and this becomes the third headwind. So I think both auto and metals, I think, are related. One is related to China, one is related to the oil sector. So I would believe that yes, there is a problem in both these sectors, and as of now, I think the only sector we are asking people to look at is start accumulating gradually in the large caps on the FMCG space. Mid caps, I think, look at very specific plays like specialty chemicals.
Okay. All right, well, hold that thought. Let's also take a look at all the stocks which are going to be in focus in today's day of trade. Of course, there's plenty of stocks in news that to keep an eye on. And of course, there will be a whole host of brokerage calls which will also be in focus. And as usual, we do have our research team joining us for the same. Nikki and Sumit, thanks for joining us. Nikki, a very happy birthday to you. Why don't you tell us a little more about the stocks in news which are in focus?
A couple of them. I'm going to start off with the positive. Reliance Industries Security, where the promoter has upped the stake in the company by 2.5%, more than a 2.5% stake. The acquisition is pursuant to the scheme of arrangement not involving the company. Next on the list, we have Bajaj Finance. Expect some reaction on that counter. The board has approved raising up of funds of, to the tune of around 8,500 crore via QIP CCD, where the company has sold Global Village Tech Park, which is for an enterprise value of more than 2,700 crore. This is expected to bring down the debt of the company, which at present level is around 4,970 crore. CG Power and Industrial, some sort of negative reaction there. The company has been barred, the former chairman rather has been barred from accessing any kind of market, and along with that 3 other officials from the company. Gujarat Alkalis and Chemicals, which is installed and commissioned remaining 12.5 million ton of solar power plant in Charanka, and apart from that we're expecting some kind of negative reaction coming in from Glenmark Pharma, where S&P Global Ratings has revised an outlook to negative from stable, so do expect some sort of negative reaction on that counter. Last on the list, we have Magma Fincorp, which has entered into an arrangement with ICICI Bank for said bank finance business. The agreement shall include sourcing and servicing of loans and collection of repayments for that matter.
All right, thanks Nikki for that. And what about brokerages which stand out today, Amit?
Well, a couple of them. First one is on Reliance Industries, where Credit Suisse has maintained their neutral rating on the stock with a target price of 1,210 rupees. Now, according to the brokerage, the petrochemical margins are weakening further, and they're expecting petchem weakness to continue given the high supply condition that we have been seeing in the global market. However, there won't be any much earnings impact for Reliance Industries because this lower petchem margins will be offset by higher refining margins, which is driven by the surge in gasoline and the diesel cracks that we have witnessed in the recent past. Second one we have is on where Axis Capital has upgraded the rating on the stock to an add from reduce and have hiked the target price to 740 from 710 rupees. Now, according to the brokerage, the challenges that the company faces right now will mitigate further as the earnings improve going forward. Now, they met the management of the company and they are saying that the transition has been managed well by the L&T and the new Mindtree team. And going forward, the brokerage believes that the strong deal wins would help accelerate revenue momentum with margin expansion for Mindtree. Now, along with this, they also said that the management sounded confident of improving the growth trajectory for the rest of the financial year 2020 after a muted first quarter of financial year 2020.
Okay, thanks guys for getting us those updates. So a whole host of stocks to keep an eye on there. But Mr. Harihar, I'm going to come back to the OMCs and prod you a little more about how would you go about dealing with some of them, because just before we had the news from Saudi Aramco, they were actually on the rise. Would you take this as an opportunity to go and buy into some of these OMCs?
No, I would be a little more careful. See, what happens is if you look at a company like Indian Oil, I think they tend to benefit from higher crude prices largely because it leads to a higher valuation for their inventory. So Indian Oil typically has a benefit in the form of higher inventory valuation. But if you look at BPCL and HPCL, where the refining capacity is not that big, they are largely marketing companies, and marketing companies are fine or they're neutral as long as they can push the cost to the final consumer. Now, I'm not sure if oil goes to $85 or $90, whether the government would be keen to push all the additional costs to the end customer. So there could be some amount of a subsidy burden, and we saw it happen in October last year when around 1 rupee was pushed into the books of HPCL and BPCL. So I think if oil goes beyond 80, I think we could very easily get to a situation where these companies will have to bear a part of the burden. So downstream marketing companies, we are quite skeptical. I think notwithstanding the positivity we saw in BPCL after the sale announcement, I think this oil price hike is not a very good news as far as these companies are concerned.
What's the sense on Bajaj Finance? They've approved raising 8,500 crores via QIP. Do you think in such a market and such an environment, will they be able to garner such an image, or will they have to tone down expectations on how much they will be able to garner?
See, I think they should manage, because if you look at the market, there is still a lot of liquidity in the sidelines, but I think liquidity has become very selective. And especially after what we saw in cases like Altico, I think liquidity is very, very selective when it comes to any of these, non-banking finance names. So probably a company, if you leave out the big names like in HDFC and LIC Housing, probably a Bajaj Finance or HDB Finance, I think they are the kind of names that can get a lot of buying interest. So I wouldn't be surprised if the issue sails through quite easily. early.
Okay, just hold on, Hari. We joined in by our technical analyst, Chandan Taparia of Motilal Oswal Financial Services joins us, and joining us also is Amit Shah, technical and derivative analyst at BoB Capital Markets. He also joined us. Many thanks to both. Chandan, firstly to you, what's the sense that you've given your clients in terms of how to position themselves on the Nifty and the Bank Nifty and overall trade setup?
Yeah, first talking about the Nifty index, we have seen a correction of around 300 points in last two trading session from its Friday top of 11,080 zone. And interestingly, the market has got stuck in a range and it is finding multiple hurdle near to 11,111, 11,141 zone. So failure to move to surpass the same has taken it to lower levels, and also the concern of the geopolitical issues. So the immediate trend is again in pressure, but downside support could be there near to 10,750, 10,720 zone. So as of now, already we have seen the correction from higher levels, so it may see some bounce back move. So here the entire structure will be the range bound move in between 10,750, 720 to 10,950, 11,000 kind of level. So after the decline of last 2-3 trading sessions, some sort of buying interest or the consolidative move could be seen. So either we'll play with the shortest angle strategy to play this range, or for an intraday point of view, by putting support of 10,750, we'll play the bounce back move towards 10,880, 10,950 zone.
Okay, well, Amit, good morning to you too. We are looking at a chance of a little bit of recovery on the Nifty, at least as per indications of the SGX Nifty futures. How would you address markets right now, specifically the benchmarks?
Good morning, Agam and Darshan. So, well, if you consider yesterday's intensity of the fall, that was definitely very much of concern, and the market breadth also had declined quite sharply. However, if I have to just consider on the put writing side, we have not seen on a monthly contract too much of unwinding happening. In fact, there was some marginal addition which happened. So the maximum put open interest concentration still remains at 10,800 odd, and that will be tested very strongly in the coming week or maybe the next week towards the expiry. So if that is holded, we are likely to see some range bound activity, where on the upside, 11,000 will continue to act as a very stiff resistance, which was close to yesterday's high. And even the call writers have moved lower since the time we have seen during the series of the entire September month, where earlier they were concerned around 11,200 odd, and now they have also moved lower to 11,000 odd strike. So in my sense, 10,800 to 11,000 will be a very critical level to watch out for. Crude has definitely hampered the pullback momentum what Nifty had seen in the last week, since the time it was hovering around 11,100 odd band. And the crude playout has led to intense selling. So in my sense, even on a crude perspective, till the time we are sustaining below 68 odd on the crude level, that will still be considered as a positive sign, and that 800 levels can be holded. But the more it sustains above 68, the inching closer towards 75 levels, that's where I feel the VIX will play out, and then the put writers can be aggressively tested. So I don't have any index trade at this point of time. I would be monitoring how these two levels are holding at in the coming time, and accordingly I would be positioned to play a trade either on the positive or on the negative side. But on the downside, I am very more concerned if it violates and sustains below 10,800 or 10,750, then the room is quite wide towards 10,300 odd.
Okay, Amit, coming to your strategies, you're long on CSC and short on M&M. Give us a strategy and tell us why what are the reasons you are positive or negative on these stocks?
If you consider CSC, the stock overall in the last 3 series has seen a good traction of rollovers, open interest, and has been holding quite firm. The stock has seen a very good consolidation, and now the way in the last couple of trading sessions, the way it has given a breakout above 800 odd level, that's a very good sign which I would consider. A steady higher top, higher bottom formation on a monthly, weekly chart, and it has given a sustained breakout above 800 odd. So the more it sustains above 790, 800, I believe the more strength the stock will build in. 790 would be my closing level of stop loss, and on the upside, the more it sustains above 800 odd, any level to 810 to 815 can be considered as the accumulation range. And on the upside, I believe the stock potentially can head towards 880 to 920 levels in the coming few weeks time frame. My another call is a sell call that is on M&M. Now the stock overall, I have been quite negative on the auto space since many expiries, and I feel now looking at the overall structure of M&M, the stock has violated a key support of 560 on a sustained basis. It's been more than 4 to 5 weeks. The stock is not able to cross that mark. So till the more it sustains below this, there can be another leg of downside where 480 to 460 levels can be tested. On the upside for M&M, 550, 545 will continue to act as a stiff resistance.
Okay, and Chandan, your top calls for today?
Yep, two buy trades and one sell idea. First trade is buy on Hindustan Unilever. Comparatively, we have positive on most of the FMCG counter, including Colgate, HUL, Dabur, Marico, Bata India. So Hindustan Unilever is a buy trade from our side, as the stock has taken support at its key level, also respecting to its 50-day EMA, surpasses falling supply trend line, and all set to head towards the new 52 weeks or the lifetime high territory. So recommending to go long on Hindustan Unilever with a stop loss of 1805 and expecting it to move towards 1890 to 1900 level. Second trade, that is buy on Titan, and this stock has given a consolidation breakout. It has managed to surpass immediate hurdle of 1120 zone and given a consolidation breakout on the daily weekly scale. So positive price structure can take it to higher levels towards 1200. One can buy with stop loss of 1138. One sell idea, that is sell on Bank of Baroda. Structure of the most of the PSU banks are under pressure. These stocks are having built up of short position with sustained call writing activity. So one can sell on a small bounce with a stop loss of 97.50. And finally, we are expecting it to head towards 90 levels on the downside.
Right. Well, thanks, Chandan, for that. But time to head over to the JPMorgan India Investor Summit. And the first voice we have from there is the financial giant's head of currencies and emerging markets in Southeast Asia, Brijen Puri, who doesn't see the Indian currency appreciate much from its current levels. Devina Khanna caught up with him on the sidelines of the event and started off by asking about what's weighing on the Indian rupee.
You know, one is the domestic part, which obviously we've seen the economy slow down. But if we look at the bigger picture, and that's where rupee does not necessarily stand out as egregiously as an underperformer, is the fact around what's happening globally. So around the same time, we've had a flip-flop and at the margin a deterioration in the US-China relationships. Admittedly, last couple of weeks now we are looking forward to a mini trade deal. But the issue is the market does not believe that we're going to see a sustainable overall trade deal. There may be some mini wins, but at no big bang agreement, given that there is still a very wide gap between what the US wants and what China wants to give up. So with that, we've seen the yuan depreciate. We've seen the INR kind of empirically getting linked to the yuan. CNH INR of 10 is what people have been talking about, which kind of gives a little bit of an asymmetrical reaction function to the rupee. And therefore, while we have seen it depreciating at the margin along with the yuan, the issue is that even locally we've not seen the news flow improve materially. And then, of course, like you mentioned, oil. So all of that does not add up to a very positive backdrop for the rupee just at the moment.
But if on a consistent slow pace, if the crude keeps inching higher, that will have its impact from a long-term perspective on the currency as well. You'll see the trade deficit math, the CAD math, not going in favor. 2.1% currently, the CAD, which has already gone up from 1.8% last year. But all this, in its own way, and the global market sentiment doesn't augur too well right now. The picture we can't paint is to be too hunky-dory for the currency, right? Or you would find a silver lining somewhere.
I would agree. At the moment, we are, we have a lot of the negatives which have converged. So, like we discussed, we have the US-China, we have crude, and then we have the domestic problem itself. The hope is, in the short term, if we were to see some wins on the US-China trade talks, and that stabilizes the dollar and EM globally, that would have an impact on India as well. On the domestic growth front, I think let's see what our conference throws up, but hopefully we should see some more steps coming in from the government while avoiding the fiscal issue. So given that scenario, if we do see some of these things play out, we could see a material improvement in the rupee. outside of that, Rupee will find it difficult to appreciate much beyond where we've seen it trade over the past few days.
Okay, I'll talk about the dollar index as well and what you see there. But a quick peg, if you were to give me a short-term, keeping all these nuances in mind, if you were to give me a short-term fair value for the currency, what would it be?
So, we have the Chinese anniversary celebrations on 1st of October, so we don't expect much to, there should not be a material deterioration before that. Both sides will want to ensure that. Then we have the US-China trade talks in the US, where we have Liu He going to the US to discuss. So that should keep markets kind of hopeful at least into middle of October. But given what we've seen, the yuan is also finding it difficult to move below the 7.705 band in absence of a breakthrough. Given that scenario, it's going to be that much more difficult for Rupee to go to sustain materially below, let's say, a 70 half on the downside. If the yuan is where it is, and unless the global markets are, EM is appreciating materially, if there were to be any one-off flows pushing dollar rupee lower, I would expect we would have RBI looking to support the rupee on the downside. So that's where I see rupee on the downside. And we should remain fairly contained over the coming couple of weeks to a month because of the scenario that I played out. Post that, I think it depends on how the talks go. But if the market base case were to play out, there would probably be additional depreciating pressure on the rupee through this year and into next year. Nothing alarming, but a couple of percentage points from where we are further lower in rupee value over the coming few months is what the base case would be.
Okay, Harihar, a sense on the FMCG space. Recently, we've seen a lot of brokerages coming out and downgrading, indicating that they see consumption slowdown happening. A Credit Suisse note that came out indicated it's the worst year in the last 15 years. You spoke about being selective in the FMCG space a while back. What's your sense on the sector and which are the stocks that you would bet on?
See, we would clearly look at the food space because I think a couple of things could happen. We are expecting that some kind of a relief on the GST could come in the GST Council meeting this week. So I think food is one area we like. I think the entire detergents and the personal care space could be under pressure because of higher crude prices. I think it's not exactly a necessity, so it's a postponable demand. So I think probably the food side is what will do the best. And I think Britannia continues to be our top pick, and we still believe that Britannia should have about 15-20% upsides from these levels.
Okay, well, there you have it. We have a lot of queries actually on Reliance Industries. A lot of viewers out there currently interested in what to do with this particular stock. Clearly a heavyweight, Mr. Harihar. How would you address this one? Would you buy into something like this?
See, it's a slightly hard call. I think Reliance used to be a kind of a market leader for almost last 1.5 years. I think that seems to have changed. It is not exactly the market leader now. It's more of TCS that is actually driving the market. So I would believe that now markets are looking at clarity on what happens on the capital allocation front. How are they going to put the cost of capital on the geo business? Will the petchem and refining margins sustain? I think that's a big question mark. Yeah. So till the time there is an answer to all these questions, I would expect RIL to be flat around these levels. So I don't see any great appreciation. So if you're looking at a trade, I don't think RIL should be a great bet at this point of time.
Okay, let's take a look. We have close to half a minute to go for the market pre-open to happen. Let's take a look at what the Asian markets are doing at this point of time. Nothing much happening except China has done extremely well. It's up almost 0.5%, but in terms of points, it's just 15 points up. So there's not enough traction. Let's pull up the SGX Nifty to get an indication of where we are. So 47-point uptick, but still below the 10,900 mark in trade. Yesterday, it was comprehensively broken, and that caused a big downtick on the market. So let's take a look. Just 10 seconds for the markets to go, and we'll get some bit of pre-open rates to get an indication of where we are opening. So let's just wait for that. The Nifty is opened 40 points up as indicated by the SGX Nifty. So that's the trend that we're seeing currently. Some of the stocks in focus. pull up JSW Steel, which is up almost 4% in trade. That probably might cool off. So steel starts stronger. It's managed to cool off. Tata Motors, remember they have that press conference today in terms of more details on their EV, what their strategy on the electrical vehicle side is. So that starts strong. It's up 2.5%. Auto again seems to be bouncing back. I can see Eicher moving up in trade. I can see on the oil front BPCL managing to move up in trade. So oil marketing companies, because of the 6% drop in crude that we saw yesterday, have managed to all open well in trade. So currently BPCL is the top gainer. NTPC continues to slide. Hindalco continues to slide, and some of the auto names like Maruti, which was down almost 4% in trade yesterday, that continues to slide. Pull up Bajaj Finance. Let's see what the impact of the QIP could be on the counter. It's trading up with much higher gains. Coffee Day Enterprises, they've sold one of their global business parks at 2,700 crores. So that opens on an upper circuit. Crompton Greaves Industrial forensic audit on the company. That is something that we want to watch out for. So that has opened flat in trade. And pull up Pidilite and Britannia. These are the two counters we want to talk about. Pidilite down 1% in trade, and Britannia, both of them had a downgrade. That is down 0.5%. Anything on the mid-cap and Agam you're finding interesting?
Yeah, actually a bunch of counters out here which are looking at surprising moves there. So I'm going to bring up something like a Z-Learn, because it's certainly seeing a lot of traction in pre-open, and of course it is still just pre-open, so keep an eye on that one, but we're likely to see some gains coming in there. Ahluwalia Contracts is the other one, which is also up and about, because it has seen some strength in pre-open. We have something like a PC Jeweler. Do remember that PC Jeweler did see a lot of strength yesterday, and it does seem like we could likely see some strength build on that one too. Coffee Day Enterprises, of course, is one of those stocks that will be in focus on account of another asset sale coming through, and we also have something like a CG Power, which has been in focus of late, and of course in case of CG Power we also have some news come through. Something like a GE Shipping is doing well right now, and we also have something like a DB Realty, and do remember that the realty space selectively has been doing well. Of course, DB Realty specifically has been under pressure. It's already within 10 rupees per share, but we're likely to see a positive opening there. These are some of the names that are likely to do well today, Darshan.
Okay, yeah, some of them probably will be, and Rupee is something that we need to watch out for. The Rupee has recovered all of the losses made in yesterday's trade. It's managed to open stronger by almost 33 paise at this point of time. Let's get a check with K. Harihar of FirstRand Bank, who joins us on the phone line. Thank you, Mr. Harihar, for speaking to Bloomberg Quint. What's your sense on the Rupee in the near term? What is the direction that you are estimating the Rupee will move in, and what are the levels that you're watching out?
I think what you saw on the Rupee today is clearly a reflection of the fact that Brent has tempered down, dropping $5 a barrel. And if Saudi Arabia production comes back on stream, back to the old levels, then I think this will be seen as a temporary disruption, and the Rupee should come back to that old comfortable level of 71.72, which kind of reflected the dollar index at 98 and the fact that the FIs have been ejecting from India. Now, we'll have to wait and watch as to, this Rupee move is going to be completely driven by crude moves. So if the Saudi Arabia production does not come back on stream, then, of course, you will see oil climb up. So right now, it's a reaction to the government officials in Saudi Arabia saying that they're going to see the production come back on stream. Otherwise, where do we see the Rupee? I think broadly in the 71, 72 level is where the Rupee seems to be comfortable about. It also is going to be reflecting relative weakness in the Chinese currency also, and the Indian exporters, of course, need to have that relative, strength vis-a-vis the Chinese currency. So I think the two factors which you'll watch are crude, of course, short-term, and on the slightly medium-term basis, the favorable noises that have been made on the U.S.-China trade front. I think that also will be important, because if you do see a headline that the U.S. and China have shaken hands and are going to sign a trade pact, then you will see the Chinese currency going back left and getting stronger, and the Rupee's strength will come back. Until then, you'll see the Rupee in this range.
Right, Mr. Harihar, there's also the aspect of, a relatively weaker Indian economy. So domestically speaking, if you take that factor into consideration, how would you see the fair value of the Rupee?
A weaker economy, of course, is an important factor, but the impact on the rupee actually flows through the FI behavior as well as the exports and imports behavior. So what's happened is, as far as the trade deficit is concerned, it's been hovering in the $12 billion to $13 billion per month. So where the exports are tempering off, you're seeing imports tempering off even more, both crude, gold, as well as non-oil and non-gold. So from that point of view, incremental pressure on the rupee seems to be low because both exports and imports are adjusting. FI behavior is the one that is not a very comfortable sign because for 3 months in a row, including the current month, we've seen the FIs on the exit door. And I think that if it continues in a big way, I think especially for those hedge funds which are running a clean position and don't do the hedge, especially because the hedge costs have gone up quite a bit, I think that little outflow will become a little bit of a bigger outflow, and that can cause pressure on the rupee. So the direct impact of a weak economy will not be, directly on the rupee, but as earnings per share go down, as the projected earnings per share goes down, then the FI's behavior in terms of exiting out, I think that will cause an issue.
Okay, maybe Mr. Harihar, we'll leave it at that. Thanks so much for speaking to Bloomberg Quint. Hari, anything that you're recommending your clients in terms of stocks that should be accumulated in this fall?
IT is a sector we actually been talking about, and I think we do believe that despite the RBI coming and supporting the rupee at around the 70 to 72.5 mark, we could see a gradually weakening of the rupee, largely because I think, as the other guest also said, with the CNY beyond 7.1 per dollar, I think the pressure will remain on the rupee. So we believe that at these levels, IT could be I won't say a great performer, but definitely a safe haven in the markets. So we are specifically recommending Infosys and Tech Mahindra to be bought at these levels.
Okay, let's ask some of our technical analysts. Chandan, anything interesting that you're seeing in pre-open? Anything that's caught your eye?
See, I think again the stock specific action could be there in the market. Some recovery is there, but I think weakness could be there in the auto counter as of now. Because the Nifty auto, which has seen some recovery in last 2 weeks, is finding some hurdle at higher levels. And again, I'll be positive on the IT counter, including the Infosys. The stock is comparatively near to lifetime high territory, recently taken support near to 800, 810. So that could play as support for the next fresh new high of 845, 860 zone.
Okay, Chanda's already spoken about Titan, but Amit, I'll take your view on this one as well. We've seen some strength. How would you address this? Do you also see strength, or would you advise going in about it with a little bit of caution at this point in time?
This is for Titan, right?
Yes, Titan company, yes.
Yeah. So I would wait for Titan, purely considering, the stock had witnessed a sharp gap down from 1250 to almost at 1170 odd. And now it is witnessing some kind of the yesterday's high is close to the gap filling area. So if you look at the overall structure, the way the intensity of the fall from 1350 to almost 1050 the stock has seen, it is yet not retraced 50% of their entire fall. So in my sense, I would wait for some time. It can be just more of a short-term kind of a play, but the more it needs to sustain more about 1210, 1220 for a positional structure to play out. In case of any violation this time below 1130 odd, the stock can again see some kind of weakness. So I would avoid in this space.
Okay, let's move on. And Credit Suisse has downgraded Britannia and Pidilite, citing stretched valuations and the current economic slowdown. Yash Upadhyay gets us more details on what the Credit Suisse report is speaking about. Yash.
Morning, Darshan. So, as far as Britannia is concerned, they have gone ahead and downgraded their rating one notch from outperform to neutral, and have also cut the target price from 2,975 to 2,750 on the counter. Now, they expect their FY20 revenues to be subdued on account of the macro slowdown, and they expect their revenues as well as EBITDA growth to see an unlikely potential growth for the next 1 to 2 years. The slowdown, along with the fact that they stretched valuations, they leave limited upside for growth in the counter. For Pidilite, they have gone ahead and downgraded their rating by 2 notches from neutral. So they've downgraded from neutral to underperform on Pidilite, and they've also cut the target price to 1,125 from 1,175. Now they expect that the segments which are linked to the real estate space to face severe pressure, which includes their waterproofing and the roofing solution business, which is basically their Dr. Fixit and other businesses. However, margins would see some tailwinds going on account of the cool off that we've seen in some of the key input costs like VAM, and they expect their margins to see some amount of tailwinds in FY20. However, the slowing volume growth which we saw in the first quarter as well, coming in at about 6%, that is a big concern, and valuations, they leave limited upside for the counter.
Okay, Yash, thanks for getting us those brokerage calls for the day, but we're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. Well, starting off, private equity firm Blackstone and Taparia Sattva Group have decided to acquire Coffee Day's Global Village Tech part in Bengaluru. The deal is valued at 2,700 crore rupees.
Bajaj Finance will be in focus today after the board approved plans to raise close to 8,500 crores via a QIP.
And Reliance Industries promoter increases stake in the company by 2.7%. This acquisition is pursuant to a scheme of arrangements not involving Reliance Industries.
SEBI has ordered a forensic audit of CG Power's books from the financial year 2015-16 onwards. It has barred former chairman Gautam Thapar and 3 others from accessing the markets.
And Magma FinCorp enters into a co-origination arrangement with ICICI Bank for asset-backed finance business. Agreement shall include sourcing and servicing of loans and collection of repayments from customers.
And lastly, Credit Suisse downgrades Britannia to a neutral from an outperform and cuts the target price to 2,750 from 2,975 as earlier. So Britannia will be in focus today.
Okay, well, I'm going to talk about a few stocks which from the large cap space which did perk up ever so slightly yesterday. Actually, one of them did see a sharp rise, and that's Nilkamal. It's not always that we speak about this company, but it was one of those companies which did see a sharp advance in an environment where the broader markets were actually taking quite a significant fall. Chandan, if I can come to you on Nilkamal, anything that you're seeing here, anything that you'd watch out for, or perhaps be cautious as far as this one is concerned?
Yeah, but this stock has seen the strong momentum on last trading session, rallied by around 19% with significant surge in the volume activity. So medium-term trend is in pressure, but it has taken support at the multiple price behavior actions near to 50 EMA. So I think the way it has witnessed a strong recovery, some sort of momentum could be there. As of now, the support comes near to 1100, and the stock has potential to revisit the previous day high of 1200 and higher zone as per its price volume breakout on the small time frame.
Amit, what's your sense on BPCL? It's trading as the top leader. In pre-open, it's given a break. It's given an opening of up more than 2%. Will this continue? What's your sense?
See, overall, if you see, it has given a good breakout above 355 purely on a short-term perspective. So the more it holds above this, there can be a reattempt for a positive momentum in the counter. But however, considering yesterday's fall, what the stock has witnessed, I'll be more comfortable to play more of a pullback once it is sustaining about 383. Till that time, I will wait.
Mr. Harihar, there's also a question on HEG, the fact that the RSWM Group, which is also, if I'm not mistaken, a promoter in the company, has sold some shares yesterday. But if you keep that aside, if you keep that news aside, what's your view here?
We are actually a little cautious on these graphite companies because, these stocks have corrected about 75-80% from the peak, and then I think there has been some kind of a dead cat bounce at lower levels. And we saw that, I think, both in HEG and the Graphite India. So, my only worry is that, these companies really require a robust growth in steel demand to be really profitable, and that doesn't look to be coming at this point of time. So, I would obviously be cautious on both graphite and HEG at this point of time.
Okay, let's take in calls from our technical analyst before the market opens. Chandan, your top call before the market opens?
Yeah, I have recommended to trade, and I think I'll go with Hindustan Unilever. If you ask about the one trade, then I'll suggest to buy Hindustan Unilever for next 1-2 days with support of 1805 and expecting it to move towards 1890 levels.
And Amit, what's your top call for the morning trade?
So, addition to CESC on the long and M&M on the short side, looking a good traction in Dabur as well, considering the pre-opening. The stock has been with a good trading with a good biasness. I would be positive on this counter till the time it is above 440.
All right, so there you have it, guys. Well, just about 4 or 5 seconds left for markets opening, and we're going to keep an eye on how will the markets. But for now, of course, we're looking at some strength on expected lines, as indicated by the SGX Nifty futures, about 0.5% gains for the benchmarks, in a little over that. And as far as the Nifty banking index is concerned, that is advancing in line with the Nifty and the Sensex. Let's take a look at the the broader markets, and of course more advances coming in here as well. So it does seem that there is a little bit of a recovery after the tremendous volatility that we saw yesterday. And what do you know? This is the heat map. Just 4 or 5 losers in comparison to many more gainers. So we do have, again, on expected lines, BPCL IOC recovering. Indiabulls housing finance is an interesting one, at least on a technical basis, because it did seem like we did see an increase in volumes yesterday towards the buying. Yes Bank, Hero MotoCorp, and along with GAIL also advancing in trade. A handful of auto names out there in those stocks which are advancing. In terms of the weakness, Britannia is the only one where we are seeing a little bit of a drop, of course, largely possibly on account of that downgrade that we saw from a brokerage. But if you leave that aside, we don't have too much to speak for in terms of losers, all of them down by less than 1%. So this is as far as some of your index is concerned. Clearly a day of trade where we are seeing some advances, so we'll be watching out for some of these names and how they trend. But let's also talk about 2 other stocks before I toss it over to Darshan to take us through the broader markets. The first one, of course, is Pidilite. Again, it's down by as much as nearly 1%, and this is largely again on account of the fact that we've seen a little bit of a downgrade come in there. Credit Suisse has downgraded the stock, and PC Jeweler was again one of those stocks which actually advanced yesterday, but it remains in focus today, and it is seeing a further gains today in the broader markets, again largely on a technical basis. So these are the 2 stocks in the broader markets that I'm watching out for. But what else is standing out, Darshan?
So Tata Communication is up 5%, and it's moved up on decent volumes today. So that is one stock that I'm watching out for. PC Jewelers is up almost 7% in trade. Apart from it, the cinema companies, Inox Leisure is up 4%. I don't know what PVR is doing. So let's pull up PVR to see whether it's something that it's also managed to move up in trade today. Sterlite Tech has managed to rebound. It's up almost 4%. There is Indian Hotels, which has started positively, and pretty much the stock of this month has to be Wockhardt. It's up another 4% in trade. So now at levels of almost 330. It was at 270 a while back. So there is enough traction that's happening in the counter. PC Jewelers continues to inch up. The losers include, the usual suspects. You have a Arcom, you have an Everready, you have a Manpasand, you have a CG Power, you have an HDIL, you have an 8K Mile. So the usual suspects are down in trade. So at this point of time, nothing much happening except for some of the oil marketing companies have managed to move up.
All right, well, that's as far as your broader markets are concerned. But Mr. Harihar, finally, a question on coming back to the same consumption names right now. Anything that stands out for you in the consumer staples area where it would not be a bad idea to buy into at this point in time, or you want to stay away from the space given the valuations?
See, probably something like, I would say Havels or something could be a stock to look at. But, I would believe that with the housing demand low, stocks like Havels are going to find it very difficult to get any traction. So that's why I said that the only sector where we expect some positives coming from the GST Council meet this week is the food sector. And that is where we are focusing more on the food companies like Britannia more than the others.
Okay, thanks so much for that, Harihar. Thanks for taking time out today.
Thank you.
And helping us with all the stocks. Amit, anything interesting? Markets are open currently. Anything interesting that you've spotted currently that you would want to recommend apart from the usual stocks that you spoke about?
So Dabur, as I mentioned, the stock has been holding quite firm and is witnessing some kind of a good momentum on the hourly chart. So I'm keeping a close radar on that. In fact, last show also I recommended a buy on this. So would be a buyer on Dabur with 440 as a stop loss. I believe the stock is ready for another leg of higher top, higher bottom formation.
Okay, well, Chandan, Britannia is clearly under pressure as one of the only stocks on the Nifty which is losing out more than 2% currently. Where do we stand here? What would you do with Britannia? Anything that you propose?
Yeah, Britannia has given a breakdown. It was consolidating and was forming the pole and flag pattern, but it has given a breakdown below its multiple support of 26, 40, 30 zone. So I think holding below the same can take it to the next major support of 25.50 level. So as of now, the structure is showing some weakness after the gap down opening, and the stock is potential to dip down towards 25.50.
Chandan, what's your top long and top short in the auto space?
Yeah, if you talk about the top trades in the auto counter, then I think Ashok Leyland will be all-time preferred selling idea in the auto counter, because it never recovers at the time of recovery and it falls more. So comparatively safe trade on the selling side with a stop loss of 63 and expecting it to revisit the recent swing low of 57, 55. If you talk about the long trade on the comparatively positive side, then I can go with the counters like Escorts or Hero Moto. So I'll be with the Hero Moto. However, the stock has seen the sharp decline on the last trading session, witness a built up of short position, but comparatively this stock is having the good structure. So I'll wait for a decline towards 25.50 zone to pick the buying in Hero Moto, but I'll continue to be on the sell side of the Ashok Leyland.
Okay, Pharma also as a pack continues to be weak. Cipla is down in trade. Dr. Reddy's is down in trade. Among the chemicals name, UPL is down in trade. Amit, anything on the pharma space that you like on the long side or the short side?
As of now, I have a comfort with one counter only, that is Torrent Pharma. That is purely from a structural point of view. I'm just waiting for this counter to show some momentum signs, where I believe once it starts hovering above 1720, 1730 odd, the stock will be in good momentum. So purely from a structural point of view, I believe the stock has a lot of potential, where one can expect a good 15 odd % return in coming 8 to 10 months time frame, but the momentum will pick in once it crosses 1720, 1730 odd levels on a sustained basis.
Well, we have a very interesting move recently in Venky's India as well, and this one is always a hard one to call because of the tremendous volatility that the stock has been used to. So, it has very sharp up moves and very sharp down moves. That said, where do we go from here considering the kind of strength that we've seen in Venky's? Chandan, this one is for you. How would you address Venky's India?
Yeah, talking about this stock, we have seen positive momentum in the counter, and trade is continuously making higher highs, higher lows on the weekly as well as on the daily scale. Supports are gradually shifting higher, and especially in last 5-6 weeks we have seen surge in the price volume, so which indicates some up move could be seen. In 4-5 days back it has also given a consolidation breakout. So for me, the 1700 is the support, and the stock has potential to surpass the previous day high of 1785, 87 kind of levels.
All right, well, there you have it, some technical movers for you guys. Well, on that note, I'm going to thank both our technical experts, Amit and Chandan, for joining us and taking us through their views. But from there on, we move on to another very important fundamental voice. We have Nischal Maheshwari, the CEO of Centrum Broking, who's joining us on the show. Nischal, good morning, and thanks for taking the time out. These are tough times to call, but I'm going to start off with a question on the benchmarks. Specifically the Nifty. My question really is, if you leave out the top 10 stocks on the Nifty, would you want to go and buy something in the remaining 40, or for that matter, if you could just consider the Nifty 100, would you consider buying, are there opportunities out there in stocks beyond the top 10 or top 15?
So I think that may not be the way I would look at it. Basically, I would actually look at sectors, and within sectors, basically, my view has been very clearly for some time now that you need to be defensive, because I think economic revival will take more time than what market is expecting. And historically, I was just studying the business cycles, and actually whenever there has been a downturn because of the domestic consumption issue, it takes much longer to revive than external issues. So I think that's why my view remains to be that focus onto the defensive sectors. So whether it is IT, pharma, FMCG, utilities. These are some of the sectors basically which we have been recommending. Now they may or may not be the part of the any Nifty 50, but definitely this is the way we go out and recommend stocks to people.
Nischal, good morning. What's your sense on the auto space? You think that obviously the slowdown is there for everyone to see the monthly numbers that come out, but do you see this slowing down anytime soon? Do you see a bottom coming anytime soon? And what are you recommending your clients in terms of auto? Is that a sector that you would recommend or stay away from?
So I think some amount of bottom fishing is okay basically in this sector, given the valuations. The stocks have corrected quite a bit, and being a cyclical sector, basically I think you are seeing at the bottom of the cycle. So I think in the next 1 quarter there is very strong chances that the two-wheeler demand may come back, given that we have got a bountiful rainfall. And as you know, around 40 to 50% of sales of motorcycles happen in the rural side. So if rural has more money in its hand basically, and there is a festive season, so I think this next 3 to 4 months is very crucial, not only for the auto but the whole economy per se. The whole economy, you are going to see, this is the last chance basically when the economy shows some green shoots. And if it is so, I think revival will start coming in. But I think four-wheelers have some more time to go, and CV is furthest in this cycle. So CV will be the last to recover.
Right, Nischal, we have more and more estimates suggesting that the consumption space, specifically the FMCG companies, are likely to post a multi-year low in terms of growth rates, revenue growth rates for FY20. Is that also your reading? And in that case, how would you address this sector going in?
So it's been a surprise. I think some of these companies have shown some very strong volume. Basically, if you remember last quarter, now that may be one-off basically, but I still believe that around 7-8% volume kind of a growth across the FMCG looks still to happen. And if there is good monsoon, I think the rural demand will start taking off. So I'm not really worried about the FMCG sector's growth. And having said that, I think yes, valuations are challenging, but that's the only place to hide in. At least you have got some growth. There is no degrowth happening actually. What you look at in auto is basically 20% fall in numbers, which is steep. At least these guys are still growing. So whether the growth is now low single digits, but that is positive as yet.
Are you telling your clients to start accumulating some of the mid caps, or is it a better idea to just stick to the large caps now?
See, I believe basically that when large caps are available cheap, why look at mid caps at all? So even in the mid caps, basically SEBI defined mid caps is what I really see is some amount of value is there. Going beyond that, I don't think so. Now is a chance actually to go beyond and start looking for mid cap, because I think large cap itself are pretty cheap.
Right. Well, Nischal, let's talk about technology too. Now, we do know that some of the larger names have indicated a near double-digit growth. If not, of course, you have the likes of Infosys, which are aiming for around 10% as per the guidance. We have the likes of HCL Technologies, which is well over double-digit growth in top line. In TCS has suggested something like that. But if you consider just the top 5 or 6 names, and of course I understand you can't talk about them individually, but if you just consider the top 5 or 6 names, would that be a good space to hide, considering the kind of growth rates that are being projected as compared to the rest of the economy?
Yes, I think that sector is in a good shape. Basically, around 8 to 10% kind of a growth is on an average you may see. Most of the large caps and the larger mid caps doing that kind of a number. Secondly, I think Rupee is going to be in favor for them. So Rupee has again gone back to around 72. So I think that is in favor for them. And I see the way oil is behaving, I believe the Rupee will continue to remain that way. And anyway, it is good for our exports that we are overpriced anyway for our currency. So it is good for our exports that rupee continues to depreciate from here also. So given these circumstances, I believe it's a good place to hide, and you should be overweight IT at least.
About financials, which part of financials is better at this point of time, PSU banks, private banks, or the NBFCs?
I think basically we are going back to the old tested private sector banks which have got granular assets. Those is where you have to be basically, because this is the corporates are still surprising you. I don't see that there is this is going to bottom out in the next 1 or 2 quarters, because now I've been hearing that for 6 quarters, the next 1 or 2 quarters everything is going to bottom out. So it doesn't seem to be, economy is going from bad to worse, so it is better to be sticking around with the granular guys.
All right, well, what about the NBFC space, because there is a lot of talk and chatter when it comes to well, your microfinance companies. So how would you address this? And I'm not talking about some of your very large cap names, something like a Bajaj Finance, but you know, if you just consider something like a housing finance or microfinance, is there an interesting play here that you would suggest or advise?
So I think the thought process doesn't change there also. I think it is granular. So the more smaller loans, the more affordable housing, basically that's where you have to be. So whether it is Bajaj Finance or some of the housing finance companies like PNB, LIC, Can Bank, these are all guys basically who are doing 15-20 lakh loans. So the more granular you are, the better it is basically in this kind of a market. Now some of the MFI also should qualify in this, basically, given they are also very, very granular. So look at only things basically which are very, very granular in this market basically, because that's where, yes, some of this will go bad, but there will be no chunky thing which is going to come through across. And those 1 or 2 NPAs are manageable. So I think you have to stick to the granular theme.
Okay, and finally, before we let you go, Nischal, what's your sense on the commodity-based counters, be it the oil companies or be it the metal companies? You think that there is still time for the cyclicality to kick in, or you believe that, you know, this is the time to start accumulating?
No, I think it's best to avoid them basically, because I do not believe that world is looking out for very strong growth. So there's no point in actually trying to accumulate much ahead of the time. So there is lot of time basically to accumulate all these commodities. Wait, there's no hurry there.
Okay, Nischal, we'll leave it at that. Thank you so much for joining us and talking to us here on Bloomberg Quint. But on the other side of the break, from the sidelines of the JPMorgan conference, Bharat Iyer, head of equities research, will join us on the show. So stay tuned in for that one. We'll be back in just a bit.